you so much for clicking on this video. If you're new here, my name is Kela Trishaan and I make videos on lifestyle, womanhood, mental health. And if you are returning, thank you so much for coming back and thank you for your support. Okay, so today's video is going to be a little different. I want to start a series on this channel about insurance, kind of like reading your insurance policy and understanding the type of coverages that you have. So if you do have a claim that comes up, you understand how things work. I work in the insurance industry. I know I've mentioned that before. I do a bunch of story times on it. I've done homeowners insurance and I've also done auto insurance. And a lot of times people don't understand what type of coverages they have until they have a claim. If you're not looking at your policy until you have a claim, then sometimes it could be too late because you could think that certain things are covered and certain things aren't. So this video today is just going to be me discussing some common questions that come up in auto claims. So if you are interested and just have some curiosity or just need some help understanding what you're paying for, go on ahead and stay tuned. Okay, so the first topic that I wanted to discuss is what does it mean to have comprehensive collision and liability insurance? So disclaimer, I do insurance in the state of California, so our laws can differ from other states and the information that I'm giving is general, so it might vary from policy to policy, but this is pretty much general information. So for comprehensive coverage, that basically means anything outside of a collision. So to give you an example, if a tree falls on your vehicle or if some type of blunt object falls on your vehicle, that would be considered your comprehensive coverage. If you have that, that coverage would cover damage to your car in the event something like that happens. Collision coverage is exactly what it means. If you get into a collision, whether it be your fault or whether it be somebody else's fault, the collision coverage will kick in and that will take care of the damages to your vehicle. Liability coverage is what is required in the state of California. I will include a breakdown here of what the minimum limits California requires is, but liability coverage basically means that that coverage will take care of you if you hit someone's vehicle. So if you hit somebody's car, it'll pay for damages to that person's car, if that makes sense. That is required, again, in the state of California. Comprehensive and collision coverage typically is not required unless you are making payments on a vehicle. So just to kind of touch on that really quick, if you are making payments on a car, usually the lender is going to require that you have comprehensive and collision because if anything happens to the vehicle during the time that you're making payments, they're guaranteed the market value of the vehicle if the car becomes a total loss. Okay, so the second topic that I want to talk about is rental coverage. What is rental coverage and what does it cover? So, rental coverage, pretty self-explanatory. It's basically if you get into an accident and your car is now not usable, your car's in the shop, or if your car becomes a total loss. If you have rental coverage, your insurance policy will cover a rental for you for the dollar amount that you choose per day for up to 30 days. So let me just kind of break that down a little bit. Everyone knows rental coverage as being like a 30-day thing. So if your car is in a body shop getting fixed, if they deem it repairable, then you will have up to 30 days to use your rental car. Now the coverages for the amount per day can vary company to company. You've got some companies that have tiers of $20 per day, $30 per day, $40 per day, and so on. You have some companies that are $25, $35, $45. It just kind of depends on what your insurance company offers. But it's important to remember that if your vehicle is deemed a total loss, what that means is that the insurance company is going to pay you for the car. And if you are in a rental, usually you don't get that full 30 days. The reason being is because they're like, okay, if I'm paying you for the car, here's the money to go buy a vehicle. I'm going to cover rental for maybe 3 to 7 days after I make the offer to you. And then in that time, you should be looking for a vehicle. So that's kind of how that works. Again, it can vary from insurance company to insurance company, but that's typically how rental coverage works. And one more thing about rental, just to make this clear. So if you are renting through your insurance company, so if your insurance company is paying for the rental, then there is a contracted amount, again, the amount that you choose. So if you choose, let's say $20 a day, the insurance company is only going to cover a vehicle up to $20 a day, and that is including taxes. Now, some people get confused because they're like, oh, well, I drive a minivan, so I should be able to get a minivan. No, that's not how it works with your insurance company. Typically a $20 a day car is going to be like an economy size vehicle. It's going to be something small. It's not going to be comparable to your minivan. The only time that you get something that is comparable to your car is if you're going through the other person's insurance. So let's say you're not at fault and you're going through the person who hit you, you're going through their insurance. They have a duty to give you a similar vehicle. So if you have a minivan, then typically you'll be able to rent a minivan. But if you're going through your own insurance company, you're bound by the policy. So you're bound by what you said that you wanted to pay for, and if that's $20 a day, that's what you have. So you can get a bigger vehicle, but you will be responsible for the difference. And there is nothing the insurance company can do about that. Okay, so the third topic that I wanted to discuss is the duty to mitigate. You will hear this term thrown around a lot if you ever have a claim. Basically, all that means is that you have a duty to lessen the blow. You have a duty to stop charges. So the best example I could give for that is vehicle storage. If you take your car to a body shop, or if your car is sitting at a tow yard, for example, they typically charge storage on a per day basis. Every body shop is different. You have some body shops that may charge $50 a day. You have some body shops that may charge $150 a day. So once you are able to move the vehicle to a storage-free facility, whether that be your home or whether that be a facility that the insurance company can provide to you, then you need to do that. There are a lot of times where people are stuck with these excessive insurance bills, and it's because the insurance company will say, okay, we deemed your vehicle a total loss on this date. Why did you let it sit in the shop for, an additional 2 weeks? We're not paying for that 2 weeks. That was your responsibility to move the car. So that term is used throughout insurance, period. So whether you are going through an auto policy or if you're going through a homeowner policy, it's basically something that says once you understand that there has been a disaster or something has happened, you can't just allow things to just get out of control expecting that the insurance company will pay for it. You have a duty to lessen the charges the same way that you would do if you were paying for the repairs or damages. You need to do that for the insurance company as well, or you run the risk of paying some things out of pocket. Okay, so the next topic that I wanted to discuss, I've gotten this question a lot in my career, but it's basically, if I am not at fault, why am I still paying my deductible? So to kind of just break it down really easy, if you are going through your insurance company, again, you are bound by the contract that you signed. So if you signed a contract saying that if something happens, I'm responsible for the first $1,000 and then the insurance company will pay the rest, that is what you're being held to. So it's the same thing, even if the accident or situation was not your fault, you are still responsible for the deductible, because that's the agreement that you signed with your insurance company. It's similar to, I would say, maybe medical insurance, where you may have a deductible that you have to meet before your insurance kicks in. It's kind of the same thing. So the only time that does not apply is if you file the claim with what we call the claimant carrier. All that means is that you file a claim with the company that's responsible for the damages. If you go through them, you're not bound by a contract through them, so they owe you for the total amount. Now, it is possible to get your deductible back on the back end. There's a process that the insurance company calls subrogation, and what that means is once everything is paid out on your claim, if you are not at fault, then the insurance company will transfer your file to another department, and that department goes after the responsible party to recover everything that was paid out, including the deductible. So if they're able to recover your deductible on the back end, then you can sometimes get it back like down the line, maybe a few months later or whenever they settle that portion. But up front, you are responsible for the deductible if you are going through your own insurance company for damages. Okay, so I've spoken a lot about total losses in this video, so I wanted to kind of just touch on that as the last topic. But basically, my car is deemed a total loss. What does that mean and how does this work? So once your vehicle is deemed a total loss, what that means is that someone went out to go and do an appraisal on the car, and that estimate is either more than what the vehicle is worth or close to what the vehicle is worth. It simply means that even if the estimate is not at the amount of what your car is worth, if it's close enough to it, the insurance company cannot guarantee those repairs. They can't guarantee the integrity of the repairs. And so it is a business decision to just go on ahead and pay you for the vessel. So what are you owed? So what typically happens is the insurance company will use a company that looks for vehicles that are similar to your car, make, model, options, and mileage. And you get credit for, like, if your vehicle is in better condition than what's selling. You can get dinged if your vehicle is in lesser condition than vehicles that are selling. But they get an average of what these vehicles are going for, and then that is how we come up with a market value for your vehicle. Typically, they will give you sales tax, because obviously when you go and purchase a car, you're going to be responsible for taxes. The DMV, California DMV, will give you back your unused registration, and whatever deductible you have is taken from that settlement, and then that settlement is presented to you as your payout. Now, legally, the insurance company owes the lien holder. So if you're making payments on the car, then they are paid first. If there's anything left over, you get what's left over. If there's nothing left over, then it all goes to the lien holder. So that brings me to the next topic on this. What happens if you are upside down? Upside down just basically means that the market value of your car is less than your loan. So there will be a discrepancy. Let's just say, for numbers purposes, your car is worth $10,000, but your loan is $15,000. The insurance company is only responsible to pay that $10,000, so you would be responsible for that $5,000, unfortunately. But if you have what's called gap coverage, that coverage will come in and take care of that piece, so then you don't have anything to pay out of pocket. That's like a whole other topic, but if you're getting a vehicle and it's newer, I would recommend probably getting gap coverage, because you just never know what could happen, and God forbid something does happen to your vehicle. You don't want to be stuck paying for something that you don't have anymore. So gap coverage will come in and save the day. Okay, you guys, so that is all I have for you today. If you enjoyed this video, go on ahead and give me a thumbs up. That will let me know to go on ahead and continue making videos like this. Again, I am basically answering questions and just kind of giving scenarios on the things that I've been asked. But if there's something that you want to know specifically, go on ahead and leave it in the comment section below. I'll review it and try to answer it to the best of my ability. If you made it this far and you have not subscribed, go on ahead and click that subscribe button below, and be sure to turn on your notification bell so you don't miss any of my future uploads. With that being said, you guys have an amazing day, and I'll see you next time.
You mad that they don't salute you? I need a bag, size is super. They turned your back, it's like I never knew you. Leader.